Hey, what's happening, guys? Dan Darrow here with another Options in Play video update. Welcome to a busy week of earnings. Monday, it's Monday of, if not the busiest week, one of the busiest weeks. This week and next just have a ton of really big names set to report. So already a few things moving around. The market's kind of mixed in so far this Monday, but just expect a blitz of news and action as we kind of get into this week. So this video is going to talk about an interesting upcoming volatility bet and kind of what makes it interesting, right? And I'm sure you know, and I'm sure you could guess that there's a lot more thought process that goes into a quality earnings trade than just I think it's going to move, right? I mean that's not a great reason to trade just saying like I think it's going to move. There's more inputs. There's more rigorous process that is worth following to see if it really is going to move, and whether it's going to move more than what the options are pricing in, right? Because that's when it comes down to it. I mean, like that's kind of what's most important is not necessarily whether it's going to move, but is it going to move more than what the options say it's going to move, right? So that sometimes there's bullish setups, sometimes there's bearish setups, but with earnings, I mean, there's a lot of good volatility setups. So what I mean by that is that's a lot of good straddles or strangles setups. It's like scenarios that you could make a really compelling argument that the stock looks like it could have a pretty substantial swing one way or the other. I mean, up or down. I mean, not necessarily favoring one direction over the other. And in the setups that are bullish, like strictly bullish or strictly bearish, I mean, what makes those interesting don't like the factors that make those interesting don't necessarily translate to the same that make a volatility bet interesting. So up here I have the SMH, right? The video is going to talk about Texas Instruments, but you can't talk about Texas Instruments in the trade without talking about the sector. And really what I want to highlight here is, as you can see, is the sector right now, the SMH, which is that's basically the ETF for the semis. You can see that it's hanging right at the bottom, actually below yearly support. And when I pull up Texas Instruments next, you'll see how similar the two charts are. And I mean, this isn't, this isn't overnight, right? I mean, semis, yes, like the sector has started to roll a little bit quicker, but I mean, you've noticed it in some top names that the selling has been coming into these stocks for several months. I mean, there's been some like heavyweights that have kind of skewed the performance and kept us near the highs, like say like in Nvidia's, but in reality, I mean, we've seen cracks in a lot of top names for a while. Like think of like the Intels and the Microns and the AMATs, stocks along those lines. So you can see that the sector is really in danger of a substantial breakdown. And let me pull up Texas Instruments, and you can see how similar these charts are. And when you look at Texas Instruments, right, you can see that it's hanging right at the bottom of its support, and it's had this really great range, right? So it's come down to 100. So it took a while to get through 100, then it broke out, ran to 120, and then the last few times that it's come down, it's held the 100 area perfectly, and each time that it's bounced, it's run to at least, give or take 110 to 115. So while it hasn't gone up to retest the 120, I mean, it was trading up around 115 just like a month and a half ago. So this is kind of snowballed a little bit faster, and when we analyze this, like going into earnings, like what you want to see is, well, there's a few things. So want to see what it's done like the past few quarters, right? And it's been kind of mixed. The performance has been mixed. It's gotten a hit, rallied, and then got hit again right here. And what you'll notice is, so for the three earnings this year, that the size of the move is declining, right? So this quarter, you could see about 11-point drop. Here in April, you can see it's about a 6-point pop. So 11, 6, and then here in July, it's about 3.75. So steadily declining 11 to 6 to 3.75, right? So the volatility is kind of decreasing over earnings this year, which goes into which contributes to the straddle, which is pricing in this week's straddle is pricing about 4.5. So you can see like the pricing of that straddle is more weighted to the recent move. So like the 3.75 and the 6 versus the average for the year, which is closer to 7, right? So if you add up like the three moves and divide by 3, then you're looking at closer to a 7-point move versus the straddle, which is like 4.5. And while that straddle is probably priced more on recency moves, the recent moves, recency bias is what I want to say. Here's why I feel like it could actually have a bigger move this week. So first off, you can't separate stocks from their sectors. Yes, there will be ones that underperform or underperform or outperform, but you really need to know what's happened in the overall sector, especially for a name like Texas Instruments, which is a top weight, right? So when you see like the sector really struggling, and like I said, it's not just a few names. I mean, there's some really important names that have really started to like show signs of cracking a while ago. So when you see the sector under pressure and good numbers are not really being rewarded, then it gives you a little bit of a pause, right? So Texas Instruments, I mean, it had a beat inline guidance and it didn't get rewarded last quarter. So like that's back when like the sector and some of these stocks were acting great, or maybe not great, but they were acting quite a bit better than they have at this point. So you already had a quarter where it wasn't rewarded for good numbers, and then you combine this with like the lambs and the ASMLs and some recent like Micron, like stocks that had decent numbers that just weren't rewarded. So like that's the first, right? That's so like the sector performance is factoring into the setup right now, and then the second is the technical setup, right? So really obvious range. I mean, it's held 100 a few times, and each time it's bounced, it's gone up to 100, to 115. Depending on like each one was a little bit different, but say 100, 115. So it's going into earnings right at the bottom of this range, right at like a really really critical support level. You can see it. I mean, it's like really incredibly well defined here. So we already know that it had a negative reaction to last quarter. It sold off after a beaten inline guide, and the sector has been acting a little bit weak. And there's already been a handful of names that have like sold off after beat in either inline or slightly lower guidance. So if it has a similar reaction this week, or if it actually misses, right, a yearly range breakdown, you're looking at probably a 10% measured move. So, I mean, just to get through like the bottom of the support, I mean, you're looking at like a couple points, but then underneath this, you can see it's just open air. There's absolutely nothing under like the support range right here. So if you get like a 2 to 3 point drop, I mean, odds are that you could get like a measured move breakdown into the low 90s, and 10% from 100 into like the low 90s. I mean, that's gonna well exceed the 4.5 priced in move that the options are saying. And if positive, right? So don't want to dismiss the positive aspect, because it certainly could surprise me. It could really like blow it out, right? What we see of positive, I mean, the last time it was down here was in April, and that actually coincided with a drop right into earnings that quarter. So it dropped and then popped. So in April, it was kind of down in the similar area, right? And then it had a decent number, and it popped and ran about 6 points. So that move, well, it didn't get it through 110 initially. It did end up leading to follow through a couple weeks later, right? So the last time it was in at this setup, it had a 6 point pop just on the day after earnings. So because it reports after the close, so like the following day, it had a 6 point pop, and then it led to nearly like 15 to 20 point move in the following like 2 to 3 weeks. So using that as a guide, you're saying like, okay, on the downside, if it's a bad number and has a breakdown, I mean, you could be looking at a move into like the 90s when you do like a measured move of yearly support versus if it has like a similar repeat to what it did in April. I mean, that was a 6 point move initially, and then a 15 to 20 point move over the following like 2, 3, 4 weeks. So in either scenario, it seems that this quarter the stock is set up to move more than what the option market is anticipating, which is 4.5, and that's why Texas Instruments to me looks like an interesting volatility bet this week. So I hope that was helpful. Wanted to talk through the rationale, kind of explain things a little bit more in depth here. You know, with weeks like this and next week, I mean, you just have just so many names reporting that you kind of really need to like sift through and focus on like the quality setups, and this one to me really looks like a quality setup. So it's one I'm going to be focused on. So as always, questions, comments, please reach out. I love to hear from you guys, and if it's something that I think a lot of people would benefit from, I'd like to tackle it in these videos. Also, I'll have like a link for the repeat of last week's webinar up. So if you guys are interested in checking that out, I'll be sure to get you the link for that. So have a great night, and I'll talk to you guys all tomorrow, all right?